Hi guys, you all are welcome to this channel, and in this video today I actually want to take you guys through a deeper dive around cryptocurrency. Now I'm actually going to be assuming that most of you guys watching this content right now might actually be crypto enthusiasts. You read about crypto, a friend has told you how you made $1,000 with crypto, and somebody else told you that you're actually making big money from crypto, or you've seen on Twitter that people are making cool cash on crypto, and you're like, I cannot be left out on this one, and I want to start crypto. And guess what? You actually get to delve into the world of crypto and you're so confused, like you're confused out of your mind and you're like, where do I start from? In this particular video today, I actually want to take you guys through a deep dive around every of the area of cryptocurrency, and we can basically just see different aspects and different terminologies that is used in the crypto world so that you can actually start understanding each of these things. Because if you can understand A and B and C and D, you will probably start making better decisions around cryptocurrency, and you can actually start doing the most for yourself, especially when there are a lot of scams in the crypto world, and you don't want to fall prey for all of those scams. Don't be that guy that basically was scammed of $100 or $1,000 before he now had sense and actually learned all of this. Start now with this video, okay? All right, so let's get in. So let's look at cryptocurrency. Basically, let's start with that cryptocurrency. So at its core, a cryptocurrency is actually a digital or virtual currency that uses cryptography for security. Now, unlike your traditional currencies, cryptocurrency operates independently of central banks and government. Yes, the first and foremost cryptocurrency, Bitcoin, was created in 2009 by an anonymous person or group known as Satoshi Nakamoto. Since then, thousands of other cryptocurrencies, often called altcoins, have emerged, and each with their own unique features and use case. Now, cryptocurrency is actually built on a technology called blockchain, which I'm going to be discussing with you guys later on after now. Now, blockchain actually allows cryptocurrency to be decentralized, secure, and also transparent. Now, let's look into blockchain. Let's understand a little bit about the blockchain in a couple of minutes. Now, a blockchain basically is a decentralized digital ledger that records transactions across a network of computers. When a transaction occurs, it's grouped with other transactions into a block. Each block is then chained to the previous block, creating an irreversible, tamper-proof record of all transactions. Now imagine a blockchain as a public spreadsheet that is duplicated thousands of times across a network. Then imagine this network is designed to regularly update this spreadsheet and keep all the copies in sync. That especially is how a blockchain works. And here, it means that every transaction on the blockchain is validated by the network through a process called consensus. And this means that no single entity controls the data, and any changes requires agreement from the entire network. This decentralized structure is what makes the blockchain secure and resistant to manipulation. Now let's look at altcoins and tokens. What are these as well? Now imagine where cryptocurrencies are like different countries and each with their own currency. Now if Bitcoin is like the US dollar, then altcoin is like the euro or the yen or even the pound. They serve a similar purpose but have different features and use case. For example, Ethereum is an altcoin that is known for its smart contract functionalities. It's like having a currency and a programmable contract system all in one. Tokens, on the other hand, are like the states or provinces within these countries. They operate under the rules of the main currency, but can have their own unique properties. A great example is the DAO token, which is built on the Ethereum blockchain, but is designed to maintain a stable value pegged to the US dollar. Now let's delve into cryptocurrencies and I will help you understand what they are. Now, if cryptocurrencies are different countries, then exchanges are like the international airports that allow you to travel between them. Just as you'd go to an airport to exchange your US dollar for euros when traveling to Europe, you use a cryptocurrency exchange to trade your Bitcoin for Ethereum, for example. Centralized exchanges are actually like Coinbase, and they are big international airports with all of the amenities. They are easy to use, but then you have to trust them with your identity and funds. But then we also have, on the other hand, decentralized exchanges or the DEXs. They are actually more like private airstrip. They give you more control, more privacy, but then they can actually be a bit more complicated to navigate. An example is the Trust Wallet. Now let's look at the market volatility. Now, the cryptocurrency market is like a roller coaster, thrilling, but not for the faint of heart. Prices can soar and plummet faster than you can say hold, And this volatility is part of what makes the crypto space very exciting. But it's important to remember that what goes up will always come down. It's a bit like investing in a startup. There is a potential for big gains, but then also a very high risk of losing your investment. Now let's look at hold and fold. Now hold is like the keep calm and carry on of the crypto world, where prices are actually plummeting and everyone panicking. Holders are the ones who grit their teeth like Kwechiri. They hold on to their coins and ride out the storm. Everybody say Kwechiri in the comment section below. Let me see you. Yeah, so FUD on the other hand is like scary stories you tell around a campfire. It's the rumors, the doubts, and the fears that can cause people to panic and sell their coins. Just remember, not all stories around the campfires are true. Now let us look at stable coins. What are stable coins, right? Now stable coins basically are like the safety net of crypto servers. When the market is doing its acrobatic acts, stable coins are there to provide a stable ground. They are designed basically to help maintain a fixed value, usually pegged to a stable asset like the US dollar and USDT. So if the market takes a dip, you can actually convert your more volatile coins to stable coins to preserve their value. It's also like having a safety harness while you are on a roller coaster. Now, number 6, let's take a deep dive and look at gas and transaction fees. Gas and transaction fees are like the tolls you pay on your highway. Yes, at the toll gate you pay, right? Just as you need to pay a fee to use a certain road, you need to pay a fee to make transaction on certain blockchain network. On the Ethereum network, the fee is called gas. The more traffic there is on the network, the higher the gas prices, just like how tolls can be higher during a rush hour. Now let's look at the word forks, and I can actually help you understand what it is. Now a fork in the crypto world is like a fork in the road. It's a point where a blockchain splits into two different parts. A hard fork is like when a road is permanently divided into two separate roads. If you want to use the new road, you would have to take an exit. In crypto, this actually means if you want to use a new version of the blockchain, you have to upgrade your software. And a soft fork is more like a new lane being added to the existing road. You can actually choose to use the new lane, but then you don't have to. In crypto, this means the new rules are compatible with the old rules, so you don't necessarily need to comply with the new rules in order to make transactions or even upgrade your software at all. Okay? I hope you followed up. I know it's actually been a couple of minutes, and let me know if you're still with me. I'll drop me something in the comment section below. Just drop an emoji. Let me know that we are all still together. Okay? So on number 8, we have the ICOs, or the initial coin offering, and they are like Kickstarter campaigns for new cryptocurrencies. A project will offer a token at a set price to raise funds for development, and investors can buy these tokens in the hope that the project will succeed and the token will increase in value. Now we also have IEOs, which is initial exchange offerings, and it is very similar to ICOs, but then they are hosted differently on a cryptocurrency exchange. It is like if a Kickstarter has its own where you could buy the product directly. However, just like not all Kickstarter projects delivers what they promise, not all ICOs or IEOs are successful investments. It is important to research thoroughly before you're participating in any of them. Now let's look at the market cap, okay? Now the market cap basically, or market capitalization, is like the scoreboard of the crypto world. It shows the total value of a cryptocurrency that is currently in circulation. Now the market cap basically is calculated by multiplying the current price of the cryptocurrency by the total number of coins in circulation. So if a coin is worth $10, for example, and there are about 1 million coins in circulation, then the market cap basically is going to be $10 million. Do you understand that? So this is actually quite very useful when you're comparing the relative size of different cryptocurrencies. But it's not the only factor to consider though when you're investing in a cryptocurrency. But then it's actually one that gives you more insight. Okay? Now let's look at alt season. It's something called alt season, and alt season is basically like the season finale of your favorite TV show. It's the time when all the altcoins start to surge in price and everything gets really exciting. Yes, right? So usually Bitcoin leads the crypto market, but during the alt season, it's like the supporting characters steal the show and start outperforming the main star. Now let's look at FOMO and FUD. Now FOMO, or fear of missing out, It's like when all your friends are actually going to a party and you don't want to be left out, right? In the crypto world, it is the feeling that you need to buy a certain coin right now because everyone else is buying it and the price is going up. Now, there are a lot of things around this, but then they only say do not FOMO, okay? On the flip side, you also have FUD, and this is like when someone tells you that the party is going to be terrible and you shouldn't go. And in crypto, it is actually a spread of negative information about a coin that actually causes everybody to want to sell. And this is why it's important you also are able to do your own research in crypto and you make better decisions for yourself. Because don't listen to anybody, you just stick to whatever you know, all right? So both FOMO and FUD can heavily influence the crypto market, but it's important to actually make decisions based on your own research, like I said, and not just the crowd's emotion. So we also have what we call the cold storage and hot wallets. Now imagine your cryptocurrency is like cash. You wouldn't walk around with all of your cash on you, right? You probably want to keep some in your wallet for daily use and the rest in a safe, at home or in a bank's vault. That's essentially what hot wallets and cold storage are in the crypto world. A hot wallet basically is like your regular wallet. It is connected to the internet and is easy to access for frequent transactions. But because it is online, it is actually a more vulnerable wallet to hacks. Now, cold storage on the other hand is like a safe or a bank vault. It is offline, right? But it's also very much more secure, but it is less convenient for frequent use. A common type of cold storage is a hardware wallet, which is a physical device that stores your cryptocurrency offline. Now, let's look at cryptocurrency pairs and what they are. Cryptocurrency pairs are like the different combination of cryptocurrencies you can exchange when you're traveling. And just as you might exchange your US dollar for euros or euros for yen, you can actually trade Bitcoin for Ethereum or Ethereum for Litecoin. And each of these combination is a trading pair, basically, right? And the most common pairs actually involve Bitcoin, Ethereum, or a stable coin like Tether, because these are the most widely traded and accepted cryptocurrencies. So what is a white paper? I'm sure you must have actually heard me talk about white paper, go read the white paper a couple of times. Now, a white paper basically in the crypto world is like a business plan for a new startup. It is a document that outlines everything about a new cryptocurrency or a blockchain project. It should actually explain the problems the project is trying to solve, the solution it is proposing, and the technology behind it, the team involved, and the roadmap for development and implementation. Now, reading a project white paper is an essential part of doing your due diligence before investing. And if a project doesn't have a white paper, or if the white paper is vague and unconvincing, then that is already a major red flag for you as an investor. Now, when it comes to cryptocurrency, there are a couple of regulations, and the cryptocurrency regulation basically is like the rules of the road in the world of crypto. Just as every country has its own traffic laws, each country has its own approach to regulating cryptocurrencies as well. Right? Some countries like El Salvador have actually embraced Bitcoin as a legal tender. Others, like China, have actually cracked down on cryptocurrencies, and like Nigeria, I think we all know the news, right? Many others like the United States are still developing their regulatory frameworks. And as a crypto investor, it is important to actually be aware of the regulations in your country as they actually impact your investment and all. Okay, so these are actually a couple of cryptocurrency, lingua that you basically want to be very conversant with. Honestly, like, you really need to actually have this at the tip of your head because you're going to be hearing it every other day. And it basically will help you to navigate the space and make the most better decisions for yourself that will make you more money and get you more returns on your investments. Now, this is just part one because there are a lot of them. I'm going to be making a part two of this particular content, but if you enjoy this one, let me know in the comment section below, and I'm going to take all of your feedback and still make part two way better than it is right now, and we can actually have more fun on here, okay? So watch out for part two. As you can see coming up, just subscribe to the channel and share this video so that more people can actually watch this with you. So this is right now for this particular video today, guys, and I'll see you in my next video. Peace.